Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin and today is Wednesday. Today was a big day in the markets. Hopefully, many of you know what that is because we already discussed this on Monday. But before we get into it, y'all be sure to like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. Right? So today, the Fed did their thing, right? We know Jerome Powell came out. He did it. He gave his speech. They gave the interest rate hike numbers, and they kind of talked about the economy and how they think it's doing. You already know we have been having a lot of fears of a recession. So what did the Fed say today that kind of tempered the FUD in the market? I have an article here that I think kind of explains everything in my opinion. So Fed raises rates half a point, so that's 50%, as it tries to tame inflation. Stocks jumped 3% after Jerome Powell calms fears that the Fed will raise interest rates too fast. So, but prior to this, people were fearful that the Fed might try and do a 0.75% interest rate hike or 1%, full 1% interest rate hike. And basically he came out saying, hey, no, we're not doing that. However, they are planning to raise interest rate hikes 0.50% every month from here on out. I think for the next 2 or 3 months is what it was. So 50 basis points. Let me just say that. So that it's already, they've already set the expectation. So we know what's to come. I know before we knew there would be 4 interest rate hikes, and now here we are. They've set it in stone. So at the end of the year, I believe we should be seeing up about 1.75% is what I believe the numbers were. So Fed rate increases don't directly affect mortgages, but home rates will likely keep rising too. Powell says the Fed is aiming for a soft landing and to avoid a recession. That clears some of that FUD up. Fed makes biggest interest rate increase since 2000 as high inflation persists. So those things alone right there, these key points for this article, and you guys can go check out this article when you have time, are the things that I think made the biggest difference. So if you were watching the markets today, you guys know that Jerome Powell held his speech at about 1:30 Central Standard Time. And it was after that speech, after they did their interest rate hikes, after they kind of calmed down some of the FUD about the interest rates being higher than 50 basis points. So there was a lot of fear. They calmed most of that fear, and we saw the markets, majority of the markets, shoot up by about 3%. I mean, it's a rally all the way around. I mean, Green Day, ended a Green Day, and we saw the market pretty much trading flat up until that point. So people were uncertain, right? People didn't know what to do. They didn't know whether to trade up or down. They pretty much just, the market moved sideways until after he got done speaking. These mortgage rates become important because, hey, how many of you are looking to buy a new home, all right? How many of you are into real estate? This is going to make it so that you're paying a lot more. I won't say a lot more, but you'll be paying more over time to become a homeowner. And that affects the economy as well, right? Because as home prices go up, more people are renting, they have less income, or this takes more money out of the economy and puts it into housing versus, things like that. And that's all important. It all plays a role. So let's check out the market. We see the Dow was up 2.81%, S&P 500 up 2.99%, NASDAQ up 3.19%, and the Russell up 2.69%, with the VIX coming down a heavy 13.09%. And I want you guys, because you already know, we're going to look at the SPY, the S&P 500, as our market model. But if we click on any of them, you'll pretty much see the same thing. Look at it. And and I believe, again, this is Eastern time, but look at it. It traded sideways pretty much the entire day, right until that point where Jerome Powell finished speaking. And that's when we see this thing make that 3% jump, that 2.99% jump, let me say that. And again, did that all the way across the board for many other single stocks and, other indexes. You see the same thing, same kind of movement, trading sideways, and then a crazy jump. I think the market was looking for this kind of relief. I think that a lot of people were out here experiencing the fear of what is going to happen next. What are the Fed going to do? Are they going to put us into a recession? Is it going to be stagflation? Is there going to be a wage price spiral? And all those kind of things become heavy, especially when you think about the economy what's going to happen next. So, all in all, I think the Fed speech today pretty much calmed and subsided a lot of those fears. And one thing I did, I tried to look at the fear index today, and I wanted to see what would it give us, right? I want to see what would it have to give us for today. We know we were at a 38, and now look at us. We're easing more back towards that neutral zone, and that is going to be good news for the markets. What can we anticipate for tomorrow? Honestly, seeing that the market can be kind of crazy and this could possibly be a dead cat bounce, but I still think we'll go into the market tomorrow seeing some grain, expecting some grain, because this is good news, right? As long as the markets do not run up entirely too much, too crazy, we won't see the market giving back too much money, because this is what people have been waiting on. We saw the same thing happen again back in April when they gave the first one. People didn't know what to expect. There was a lot of FUD, fear, uncertainty, and doubt. As soon as Jerome Powell cleared up that FUD, and actually he gave a better speech this time. As soon as he cleared up some of that FUD with the 25 basis point hike, we saw the market go for a run, and that's when we saw our 2-week greens. Right? I believe we had 2 weeks consecutively, really like a week and a half of green days, and that was beautiful. I hope to see that again, but just not at the same pace. We need to see it at a slower momentum. Instead of going straight up, we need to see this thing kind of go at a slope and go up, and hopefully we see that over the next couple of weeks instead of so much red and being beat down so much. What I do believe is that Jerome Powell put in a lot of, instead of being hawkish, meaning that they were going to be very, very aggressive and putting a lot of fear into the market. I think today they actually were seeming a little dovish. They showed some confidence in avoiding this recession and that the market would recover and that they would be bringing down inflation by the end of the year. I think they even said that they believed that March was the peak of the inflation. So when we saw that 8.5% inflation rate, I think they believe that was the peak. So that means inflation should be tempering down even now. So hopefully this brings us more green days in the market. Hopefully we continue to be profitable, which you guys know we're going to do whether the market is going up or down anyway. But this is the type of news we want to see. Hopefully we'll see that tomorrow. As for right now, we're going to continue to dollar cost average into our plays. Watch the market. Actually go watch my video for understanding charting patterns so that you can try and trade options, whether it's a call or a put option based on the signals. Supply and demand, resistance and support and all those things. So make sure you go check out that video so that you can learn something there, so you continue to make money with me on the technical side, not only the fundamental side. On that note, if you guys do want to learn more about technical analysis, you guys let me know in the comments, and we can, or just inbox me. Feel free to inbox me and we can do that later. But now I thank you guys joining the journey to become wealthy. Hopefully you have a good night, and I'll see you later.